Hi, it's February 28th. This is the BAM Weekly Muni Market Update. I'm Mike Stanton here with Brian Babler from BAM's Capital Markets Desk. Brian, thanks for taking some time at the end of the week.
Morning, Mike.
Morning. So this morning we had the PCE, often described as the Fed's preferred gauge of inflation. What did we learn?
Yeah, it's been an interesting week, and PCE is capping it off. We've definitely in the balance of growth versus inflation. This week was definitely a good tone in terms of lower growth. Earlier in the week, a lower than expected consumer confidence rating really sparked a pretty big rally in treasuries, which has held, and the PCE reading this morning, which was kind of right on the screws at 0.3 month over month, and coming down to 2.5 year over year, kind of really gave the market a little bit of what's happening right now. Is the market is feeling that there's enough evidence on the growth side that will help the Fed continue getting back to cutting rates. So right now, fully the market's fully pricing in at a minimum of July cut. Perhaps we see something sooner, but fully pricing in 2 cuts this year as growth continues to slow, and we've seen rates rally pretty substantially. So this week we saw almost a 20 basis point move in some parts of the curve. The 10-year rallied down about 20 basis points. We're right around a 424, 425 right now, and the 30-year is down around a 452, which is about 15 basis points lower week over week. So that's really a nice move. That accounts for the majority of the year to date rate move, which is around 25 basis points lower since the beginning of the year. So we're seeing lower rates, and that's really supported by the economic indicators that we keep seeing. Next week will be a big one with non-farm payrolls, and that's one of the big ones left before the FOMC meeting in the middle of the month this month.
And translating that over to the muni market, obviously you always see the macroeconomic and treasury environment as a starting point, and then the kind of the market specific supply and demand dynamics in munis on top of that to drive the tax exempt curve. Where is that standing these days?
Yeah, munis have also rallied a little bit, but have underperformed the treasury rally. So from a relative value perspective, munis have cheapened up a little bit. The 30-year muni to treasury ratio is around 85% now. In 10 years, it's behind 67%. So munis have moved, call it 5 to 10 basis points lower week over week, which is a nice concurrent move with treasuries, but also cheapening as an asset class a little bit. And part of that is, we continue to see solid supply, more than 10 billion price this week. We have another 11 billion or so scheduled to price next week. So the supply side, is helping keep things in check a little bit, but the market continues to perform well. Deals are not necessarily getting hung up in any way. There is demand. We continue to see mutual fund flows. I think it was another 785 million positive fund flows this week reported by Lipper. So we continue to see a fairly healthy market, just lagging the treasury rally a little bit, which is in some ways healthy for munis.
Any transactions stand out to you on the calendar?
Just real quickly to recap, this week BAM had a very solid week of activity. We insured around 240 million in the primary market. Some of the highlight deals included University Area Joint Sewer Authority, which was about 49 million, as well as Lake Tahoe USD in California, which was about 35 million. Next week, again, mentioned a solid supply week, over 11 billion expected, and BAM is focused on 2 transactions that we should be part of, amongst others. But Youngstown State University in Ohio will be priced by PNC Capital Markets, and the city of Hutchins, Texas, is expected to be priced by Estrada. So we'll be keeping a close eye on those deals.
And in kind of active market, we're also starting to take a look at people looking forward to maybe some changes on the credit side of the muni market. This week, BAM published two major content pieces that I just refer our viewers to take a look at on our website. The first is a podcast where we talked about the outlook for higher education. That featured a guest, Liz Clark from the National Association of College and University Business Officers, adding some great insights on how higher education varies from place to place and how different economic and demographic factors are driving credit in that sector. And we also have a new white paper out from the BAM Healthcare Credit Team, and the title of that is Prepare for a Pivot in Healthcare Credit Quality. And so it's a forward-looking piece really over the next out to 2027, thinking about the potential impact of the federal budget and how that might impact credit quality in healthcare. So we encourage everybody to take a look at those resources. Thanks for your time, Brian. Have a great weekend.
Thanks, Mike. You too.